The Hang Seng market is up 2.7%. It is leading the gains this morning.
Bajaj Finance, the customer growth is very good. However, AUM growth has moderated despite the fact that, disbursements have been strong.
Amazon, which is the largest employer in the United States, will hand over pink slips to thousands of employees amid growing recession fears.
We want to be very, very cautious in our outlook in the immediate term. Long term, I'm very bullish.
First take on the index, it looks decent at the moment. 18,000 is holding for now, up about 50 odd points.
We actually started operations in our first green hydrogen pilot, where we are blending green hydrogen in the natural gas pipeline.
Crude prices falling, the biggest benefit that we are seeing on the oil marketing companies, and HPCL amongst them is the biggest gainer.
The Nifty is quite negligible, just 2.2%.
No commitment has been shared by Kumar Mangalam Birla on whether or not there will be any timeline or a certain quantum of funds that will be infused.
Nifty is at that 17,908 mark.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me are Nigel D'Souza and Mangalam Malu. Good morning. The sensex has cracked 400 points. The Nifty is trading below 18,000 mark. Right now, as we speak, it's 17,950. But look at the intraday low on the Nifty. The low today was 17,892, which coincides with the 100-day moving average on the Nifty. So we've taken support at that 100-day moving average. But this 18,000 level, which we breached today, was seen as an important technical support level for our markets, and that's been taken down. But from the day's low, in the last few minutes, there has been a bit of a recovery. The sell-off at least seems to have paused. The mid-cap index is holding up in the green. The mid-cap index is up 0.3%, but the advanced decline ratio is firmly in favor of the losing side. The advanced decline ratio, if you pull that up, you would see it currently stands at about one stock in the green, or two stocks in the green, for about three currently in the red. But the mid-cap index has attempted a pretty good recovery just in the last few minutes. Today is the weekly options expiry, so the last hour is going to be very crucial. Financials have taken a bit of a tumble, led by Bajaj Finance, FinServ, Axis Bank. Axis Bank very recently had hit a fresh 52-week high, but today you are seeing shots opening up in that. ICICI Bank is looking weak in trade, and on the flip side, FMCG stocks are higher as Marico and Godrej Consumer seem to suggest or signal that perhaps the demand is improved just marginally, but it has improved, and that's fueling a bit of a rally in Britannia, ITC and HUL. So for now, we've broken below 18,000, but not giving up too much ground, because from the day's low, there has been a bit of a recovery.
Two stocks, Reema, in the last 30 minutes that have recovered, ITC as well as L&T. The intraday charts of both those two tell you that that's why the Nifty is fighting back from the lows of the day, and that's why we're up close to around 50 points. So there's an element in there because of weekly expiry, as you mentioned. So that's why we're seeing some bit of a weakness. However, the positive is that the mid-cap index is showing some traction. So portfolios will not be getting that badly hurt, though in fact it's a rather weak trading session. Odd. Pull up those two stocks, ITC and L&T, both those two intraday charts. If you can get both of them up for you on the screen, that's telling the reason why we're seeing a bit of a recovery today. But since it's weekly expiry as well, that'll play out. Well, let's pull up a couple of strikes. The 18,000 call, the 17,950 call, well, there's writing being seen aggressively at both those two levels. So the bears, they have had a good trading session. There's been selling, and there's also been call writing. The 17,950 call, well, that's fairly active as well. On the downside, the 17,900 put is pretty active. So today, going by the day's low, going by the 100 DMA, well, that becomes a crucial zone that we should be defending on a closing basis. 17,880 to around that 17,900 odd mark. On a closing basis, what the bulls will like is, well, we close above the 100 DMA, on the Nifty itself, which is at around the 17,900 odd mark. And on the Nifty Bank, we have breached the 20 DMA, we have breached even the 50 DMA. Now we are 100 points away from that 50 DMA. So the 42,620 odd mark, that's a crucial zone. Let's pull up the Nifty Bank. We have recovered from the low point of the day, but we're still 100 points away from that 50 DMA, and the bulls will like to, defend that mark in today's session. Mangalam, what else?
Well, we probably would have dodged a bullet in today's trading session. We're down 90 points on the Nifty, about 400 points on the Nifty Bank. With the kind of shorts that were built up in the system in yesterday's trading session, one would have thought that, the cuts could have been much larger, but we're maintaining. The mid-cap index's outperformance is something that I'm watching out for. In just the last two trading sessions, the Nifty Bank has lost almost 900, almost 1,000 odd points. So what that does from here will be extremely crucial. Come Monday, we will also have all the IT earnings coming by. So with the kind of decline that we've seen in IT stocks, how much the weakness is priced in or not is something we'll know over the next 1 week. So let's see where that goes right now. The Bajaj twins, clearly the laggards on the downside, but on the way up, we are seeing some resilience come by from the FMCG pack. Just looking at a couple of these mid-cap names which are doing extremely well. Tires lead the pack. We have Apollo Tires, which has moved to the high point of trade. MRF follows closely. Of course, it is hefty priced stock right now, 91,200 on that counter. ABB and BHEL, a couple of these, capex names also doing extremely well, both of them at the high point. We have more stocks declining than the ones which are advancing, but the advancers are actually gaining a lot more than in absolute percentage terms as compared to the decliners. So that is something I'm looking out for. And a lot of these cash stocks actually are spiking. Specialty restaurants, case in point, up around 9% as we speak. And most of the gains have actually come by in just the last half an hour or so. Landmark is the other one which is doing extremely well. And then we have some volumes picking up on Vadilal Industries as well, about 7.5% higher on that counter.
Okay, let's tell you what we've lined up on the show then today. First up, Bajaj Twins are the top index losers. This is after the pace of AUM growth for Bajaj Finance moderates to its lowest in the last 10 years. On the gaining side, we put the spotlight on Sundaram Fasteners. The stock has hit a record high today. We'll also be joined by Deven Choksi of KR Choksi and independent market expert Ambarish Baliga for a chat on several stocks from a fundamental point of view. And finally, we'll take the market discussion forward with our alpha manager for the day, Ravi Dharmshi, the Chief Investment Officer of ValueQuest Investment Advisor.
Well, how do you position yourself in the final hour of trade? That's going to be important. For the time being, though, just pull up a couple of stocks. You have PFC and GSPL. Both of them have moved to the high point of the day. So in an otherwise wobbly market, you have select stocks that are doing pretty well. That too, frontline FNO names. But how do you position yourself for the final hour? Well, Mitesh Thakur is back with us. Mitesh, these bounces are getting sold into, and that's been the trend all through the trading session. What's your sense on the index as well as individual trading calls that you have for us?
Yeah, good afternoon, Rajat. I think the problem today has been that, we have started getting below 18,000, which is slightly on the negative side. And that's why I think, the tide is turning slightly towards the negative side. So my sense is that I think, you will see supply emerge at every pullback or intraday attempt to get higher. And you will see kind of short building, shorts being built into the system. So overall market sentiment has definitely weakened with today's fall. And I think if we close below 18,000, then I think 17,800, 820 zone should be revisited. And this time there's a strong possibility that we should start breaking below that as well. So keeping a negative stance. On the stock side, I have one buy and one sell. The buys from the cash market, and that therefore, may not be affected by the market decline. So I have a buy on specialty restaurant that's given a fresh breakout. It's trading above the strong pivot levels of 234, 235. So keep a stop just around that level. 234 is what I recommend, and 260, 265 should be the first target area for the stock price. And the other one is sell on Tech Mahindra. There I would recommend a stop at about 1,018 odd levels and a target of around 985.
Right. Mitesh, just a quick follow-up on Hero MotoCorp. Hero MotoCorp is one of the stocks which is now trying to brave upwards, braver move up. It's at around 610 at the high point of trade. This week it's done okay-ish, so to say. Your thoughts on Hero MotoCorp?
Yeah. So in fact, the entire auto pack, for me, one of them isn't looking very strong. Though I think within that, I think TVS and Hero are slightly looking as the outperformers. If you look at the short-term chart patterns over here, they are positive. And the last hourly high which we got was on 30th of December was around 2760. So a breakout about that should add to a lot of strength. And then you can get a trading rally to about 2800 and in the best case scenario, even 2875.
All right. If it goes past 2760, it warrants a look on the charts. That's about Hero MotoCorp. But the big drags in the financial space today have been the Bajaj twins, both Bajaj Finance as well as we're seeing some weakness on Bajaj Finserv by virtue of its holding in Bajaj Finance. But Bajaj Finance, of course, is the biggest nifty loser in today's trading session on account of its third quarter update. Abhishek joins in with what the brokerages are making of the company's update. Abhishek.
Well, Manglam, as you mentioned, Bajaj Finance is the biggest loser in trade today. The volumes are also on the higher side, 5.5 times of 10-day average. Now, brokerages have written on Bajaj Finance. They say that the AM growth of 27% YOY is below their estimate. However, on the positive side, the customer addition is strong and number of loans disbursed, which is the highest ever that Bajaj Finance has recorded, is in line with estimates. They say that the growth has slowed down sequentially. That is Q3 over Q2. In a strong quarter despite the festive season. So if you take a comparison, a Q3 over Q2 of the last preceding 10 years in a row, this is the lowest growth rate that Bajaj Finance has seen, is what brokerages are saying. So either there was some festival impact at the end of Q2, or they might have lost market share, is what brokerages are saying. So brokerages do say that they see loan growth moderating going ahead. Macquarie has an underperformed rating with a target price of 5,275 per share, while CLSA has a sell rating with a target price of 6,000 per share. Back to you.
Thank you very much for that. Let's get in Deven Chokshi to understand more about these individual big movers that we're seeing today. Deven, afternoon. Thoughts on Bajaj Finance and the kind of crack that we've seen, and what does it tell you about the outlook for Bajaj Finance?
Yep. Good afternoon, Rima. Well, I think on one side, the number of customers they have acquired in this particular quarter has remained, I think, quite convincingly high. At the same time, I think the loan book growth of around 27%, I think, also remains, I think, relatively, I think, stable, according to me. So the market has possibly seen these numbers upwards of 30% all along. So as a habit, I think anything below 30%, I think nobody would like it, that's for sure. But the fact remains that I think the company's business portfolio, I think, remains, I think, quite well distributed. Maybe in this particular quarter, one will have to get the management commentary a little bit more clearer, whether I think due to whatever the fluctuating quarter that we have had, the loans against security has been probably one of the reasons which could possibly have affected the performance in this particular quarter to a certain extent, which they may have pared down, I think, that particular position. Also quite possible that I think some amount of loans, I think, which they may have sanctioned to SMEs may probably get disbursed in the subsequent quarter. But I think this is my probably understanding on the subject. I would like to get the clarity as well at the same time. I don't judge the company per se on a one quarter basis. I think the company's fundamental remains quite strong. Their retail credit ability, I think credit lending ability rather, I think is remaining extremely positive. And on the top of it, I think the new platform that they have launched, I think for adding multiple products under a single site, I think that also gives good amount of confidence about the distribution reach expanding for the company. So maybe once some clarification comes out, I think we can get more clarity on whether this is a permanent fixture of lower growth, or I think this particular company probably, I think, deserves relatively better because of the, I think, the new ability to, I think, run through the distribution through the platform.
Deven, but at what time would you get a little constructive on the stock? Yeah, some clarity is awaited. We're seeing a sharp downtick, but this has been a big winner in the last few years. Maybe it's had a rough last few months. Do you think maybe another, say, 7-10% correction in the stock would provide an entry opportunity for a longer-term investor?
So I think generally we have seen this particular stock quoting at a price to book of around 6.5. And anything going below 5, I think, becomes a buy opportunity for this particular company. That is what one has experienced. In my viewpoint, I think this time too, probably one would like to see whether anything around 5 price to book on a forward basis, if it is available, I think that would be an entry point to get into the stock from the valuation perspective.
Got it. All right, Deven. Thanks for that. But let's move on to another stock. Sundaram Fasteners, that's passing in trade. It's up close to 4%. Also has hit a record high today. Sonia joins us to tell us more on that. Sonia?
Well, I'm tracking Sundaram Fasteners today. It's a TVS Group company and the stock is sitting at a fresh record high. In fact, if you look at it, the stock is now up almost 50% from the June 2022 lows, and the average traded volumes are also very high today. There's a 2 times jump in the traded volumes on NSE today against a 3-month average, so it's doubling of volumes that we've seen. Now, Sundaram Fasteners is one of the largest fastener manufacturers in India. It manufactures high precision components across sectors for autos, for infrastructure, windmill and the aviation sector. And not just fasteners, it also provides metal components, cold extruded parts and forgings to auto OEMs. Now, it enjoys a very high market share of around 35 to 40%. In fact, it is the largest fastener manufacturer in India, and the earnings growth for Sundaram Fasteners has been very strong. In fact, in the first half of FY23, it's seen a revenue growth of almost 20%, and it has a good 400 crore capex plan over the next 2 years that it came out with on the back of higher demand. Now, there's a big electric vehicle play here as well. The company's Sri City unit has commenced the supply of products for hybrid and EV applications, and there are 150 crores worth of orders that the company has already bagged for EV products. It also expects to sign contracts worth over 200 crores for new electric vehicle products, and hence it is this EV play which is causing more interest in the stock. Stock is at a fresh record high today.
All right, Sonia, thanks a lot for that. So that is one stock which is at a fresh record high today. That's about Sundaram Fasteners. But one sector which is showing a fair amount of resilience today is the FMCG pack, and that's on account of a couple of factors. The first one is the fact that we are seeing a decline in crude prices. Secondly, the updates that have come in from both Marico as well as GCPL aren't particularly bad. In fact, if you just take a look at the Marico update, the India business for them has posted mid-single-digit volume growth. Revenue is in low single digits. That's because of the price cuts that they've affected on account of the decline in copra prices. Gross and operating margins for the company are likely to improve both year on year as well as quarter on quarter. That was a worry up until the first half of this year. So second half looks like margins may improve. They expect modest growth in operating profit as well. For Godrej Consumer, they've seen poor rural consumption and they've seen some slowdown post-festive season. But for them, the three problems that they had was one, weakness in the India business, secondly, weakness in the Indonesian business, and thirdly, margin problems. All of that seems to be ameliorating, if not having gone back already to pre-COVID levels itself. They've seen double-digit sales growth in India business with low single-digit volume growth. They've seen gradual recovery and sales decline in low single digits in Indonesia, while Africa as well as the Middle East cluster continues to do well for them. What they've seen overall is high single-digit EBITDA growth on the back of gross margin expansion, but some of those gross margin savings going back into marketing as well. The important part, however, is that the next quarter, the outlook looks better than anticipated on rural recovery. Despite the weakness that we've seen in the first 9 months of this financial year, everyone's eyeing easing of commodity inflation as being one big trigger. Secondly, higher crop realization would aid the pockets of farmers, so that could aid consumption going forward. Ongoing government interventions to boost consumption, and we're talking about 20 days ahead of the budget, likely stimulus in union budget to go ahead and improve rural consumption could be one of the themes that everyone's betting on as well. And as a result of which, not only Godrej Consumer and Marico, all the other FMCG stocks are doing well in today's trading session. Devin, your thoughts on the FMCG pack today and the updates that have come in?
Well, I think we have been counting on this particular possibility for some time, that with the gradual fall into the food commodity prices, it is going to basically result into the higher amount of margin impact for some of the FMCG companies who are into the food segment. Also, those who are into other than the food segments in personal care, house care, I think where the raw material prices have come down. For them, I think the margin stability is more important. So third quarter should be reflecting this particular possibility of stable margin. And thereafter in the fourth quarter, along with the growth happening from particularly rural segment, one should be seeing the dual impact. On one side, the growth related revenue upside, and also I think the stable margin environment should result into better profits for these companies in general. I think some of the companies are trading at an adequately decent valuation. So maybe I think there may not be an immediate opportunity for buying into them. Correction in the price is always good opportunity to buy some of the expensive counters. So one will have to wait till such point of time if one really wants to buy at a bargain level.
Devain, do stay on. Need to slip into a very short break, but the pullback continues in the markets at 17,960 on the Nifty, which means a 70-point recovery from the day's low. On the mid-cap end of trade, things are getting stronger. Schneider Electric has risen 7.5%. JK Tyre, rubber prices cool. JK Tyre accelerates. That's up close to 5.5%. PFC REC too, seeing some interest in the last 10 minutes. Get into a break. We'll come back, continue our chat with Devain. We'll also invite Rupen Rajguru of Julius Baer on the other side.
Welcome back. Well, a good pullback is what we've seen, at least from the low point of the day. Adani Ports, Tata Motors, Tata Steel, they have seen a bit of a spike from the low point of the day. So that's pretty good news. And now, in fact, the Nifty Bank as well has pulled back a little bit from the day's low. Hero MotoCorp as well. You just take a look at that stock. It's currently moved to the high point of the day. So a bit of a fight. Let's see whether or not it can last. I'll tell you what, the 17,980 mark, that's a very, very important mark. So that's close to around 30 points away from current levels. Given that it's expiry, and there is writing at 17,950, where the premium is 30 rupees. Well, you add that 30 rupees to around 17,950, and that's telling you that the bears believe that that level is going to hold out. If the bulls can take the Nifty another 25 points high, I'll tell you what, we could see a quick 40-50 points, in the northward direction as well. So let's keep an eye out on that mark. But tire stocks, they are the ones that are zooming away today. Seat, Bolo, Balkrishna Industries, all of them are gaining. As prices of crude as well as rubber, they have seen a bit of a contraction. Sonia rounds up all the action for those tire makers. Sonia?
Well, thanks for that. The tire stocks have been on the rise for two reasons. One, of course, demand is picking up across the passenger vehicle sector, but the other is the steep fall that we've seen in raw material prices. Apollo Tyres has hit a fresh 52-week high today. In fact, both crude and rubber prices have been at the lowest level that we've seen in many months now. If you track the prices, rubber prices are now down 24% from the April 2022 highs. Crude prices, as we know, are down 10% in just 2 days, which means that crude prices are now down 40% from the highs that we saw in June of last year. Now, crude and rubber together form about 70% of the raw material costs for tires. If you break it up, just natural rubber is 50% of the operating costs for tires, followed by which carbon black forms around 14%, and NTCF, which is nylon tire cord fabric, forms about 12% of the cost. Both carbon black as well as the tire cord fabric uses crude as a derivative for manufacturing, and hence there's an additional lower cost over there. Now, the margins of these tire companies have been on the rise for a while. In fact, if you just look at the trajectory of Apollo Tyres, the margins have been rising from 11.2% in Q4 of FY22. Now it's back at about 12%, and the expectation is that margins will improve further and earnings will pick up as raw material costs subside as well as demand gathers steam.
All right. Devain, your thoughts on the tire space? I mean, everyone's anticipating some sort of demand uptick in the auto space over the next calendar year, and now with raw material prices going down, do you think tires are a good place to be?
So, Mangalam, I think the demand scenario was never doubted, I think, as far as the tires is concerned. In fact, I think the companies which are into the truck tires particularly are having some of the best times because of the higher demand continuing, both from the OEM side as well as from the replacement market. And I think those who are into the replacement market, I think they're really having relatively better time as well. The last quarter was probably the worst quarter, and that is what I think we've been talking about earlier, that in the last quarter, the maximum impact of the negative margins happened, I think, into the business of the tire companies. And soon thereafter, with the steady crude oil prices and steady prices of other raw materials, the margins input cost, I think, has probably come under control, and that could possibly stabilize the margin and grow it. I think that was the count. Today, I think we are exactly seeing the validation of that particular possibility. And as a result of which, I think those beaten down tire company stocks, I think, are now finding some amount of uptick. This market moves in the momentum, and I think these companies, having beaten down earlier, are now finding the momentum back on the long side. And that's where probably I think you're seeing a sharper rally and the rise. Maybe the demand scenario continues good, then probably you should see the rally continuing on a momentum basis.
Devain, there is another stock we wanted to get your view on, and that's ABB. But before that, let me get to Bahishta, because Kotak Institutional Equities has upgraded the stock to a buy. Bahishta, can you tell us more details about this upgrade?
Yeah, thanks for that. Well, Kotak has released a report on ABB and they say that India is well placed to serve the European demand for IEC low voltage motors. In fact, as we know that Europe is a large market for low voltage motors, which is valued at approximately 2.8 billion US dollars, which is equivalent to 5 times that of the Indian market. And for the motion segment of ABB in particular, Kotak expects strong growth tailwinds from industries such as rail and data centers. In fact, the motion segment is expected to sustain the growth at 1.5 times its market growth. ABB is also working towards simplifying its product platforms to two. One is the standard and the other is premium. And all of this sets a good base for emerging economies to play a bigger role for captive demands of the global parent. India's sales in the low voltage motors division has grown at a healthy 60% in the past 4 years, which is comparable to ABB China's sales. Moreover, the company's offerings is 100% localized and has seen further improvement in productivity over the past 4 years. Now, this boost to exports to Europe can partially compensate for the near-term challenges that the company is facing, which is in the likes of the rising competitive intensity from key motor manufacturers, which are setting up the newer capacities in the country. Kotak has upgraded the stock to buy, like you mentioned, with a target price of 3,100 rupees.
Thank you very much for that. Devin, a quick word on ABB. Do you like it?
Yes, I think question of this particular stock not connecting to Delta is particularly more because the India's capex program is continuing in each of the space in which I think the AP kind of companies are present, particularly in the green hydrogen segment where the growth is being seen higher. I think we should companies like ABB could possibly play a significantly larger role, both from the supply as well as from the technology point of view. And I think given the kind of momentum which is now getting built across the globe, as far as the world is getting into capex cycle, particularly investment in the renewable energy. In my viewpoint, I think capital goods players like ABB, even for that matter, new contract wins for companies like Larsen, Siemens, I think these are some of the names which definitely would find a good amount of favor from the global market growth, which is basically entering into this particular space along with India market. So certainly, I think any correction in the price which ABB has seen recently, I think is becoming a buy opportunity or an entry point as far as investors are concerned.
All right, Devin, thank you so much for joining in and giving us your views on a whole host of stocks and sectors. Just keep an eye out on specialty restaurants, however, because Mitesh did speak about it being a bit of a breakout, etc. Now it's up 15% and with huge volumes. The volumes are nearly 5 times the average that we see on specialty restaurants, up around 15% higher on that counter, a fresh high for specialty restaurants. But let's also welcome Rupen Rajguru, who is the head of equity investments and strategy at Julius Baer, joining in now. Thanks a lot, Rupen, for joining in. Wish you a very happy new year. It's the first time we're speaking in this calendar year. And that's exactly the first question as well. I mean, what's your market view for 2023? 2022, India was resilient in an otherwise bleak global market. Do you think that outperformance continues?
Yeah, hi. Happy New Year to you, Mangalam, and the entire team out there. See, 2022, as you rightly said, that it was a year in which India was definitely an outlier. And we have to understand what are the reason why has India outperformed the global markets by almost, 25%. First and foremost, the earnings story, that is both micro as well as the micro story of India has been pretty resilient. So that has helped. And second, and the most important factor are the flows, specifically the domestic flows. Last year, the total DII flows was close to upwards of $30 billion. If I were to compare that with the FPI outflows, which finally ended the year with 16-17 odd billion dollars outflow. So on both the parameters, we have to ask the question that how it will shape up this year. So on first, we strongly believe that the earnings story is very much, that flywheel has been set into motion, so that will continue. And the domestic flows also, if not 30 billion at least, if I were to purely add the passive money which can come through the insurance companies, the PF money and the SIP book, it would be closer to 20 odd billion dollars. So what can potentially happen is that if there were to be a dip in the market, there is kind of enough ammunition which is there, which will be buying into the market. So just to get into the question of how do we see this year, we see this year as a year of cool off. From a global perspective, the inflation would cool off, the growth will cool off, and we hope also the war also cools off. And in that scenario, what will happen? What continued or what started middle of last year. So that trend probably might continue till the first half of this year, wherein the value stocks have outperformed and probably will outperform for at least first half of this year. And hopefully by first half we will get, as everybody's talking, the key Fed pivot. And once we have a clarity on that, I think probably we will see the growth stock picking up thereafter. But on an average, from a Nifty perspective, at a broad level, we would expect around 19.5 to 20,000 on the upside and probably 17,000 on the downside.
Okay, so fairly ranged. Rupen, since we are on the subject of flows, 95% of the foreign flows which come into India are from the non-India dedicated funds, right? Emerging markets fund, global funds. The big question is, can India see more of dedicated foreign flows? And in that, everyone's watching for clues. Now that China's reopening, do you really see this happening? That India will get a greater share or start getting more India dedicated foreign flows?
So Rima, here for a moment, let's assume even if we don't, I'm not saying we won't, but by default, if this year is the year in which, if the global investors get turned bullish on China because of pure sheer undervaluation, if the flows into EMs also come back, like with India having around 14% weightage in that index, by default, India will be the beneficiary also, because last year, as you rightly said, a chunk of the outflow was linked to the global indices, EM indices. But having said that, probably since last 2 quarters or so, definitely we are seeing a lot of talks of various funds wanting to have an exposure in EM ex China. So while some of them will materialize, it will take time. So eventually, to answer your question, from a global investor spec, is India right now an asset class? Probably not, but probably 5 years down the line, I definitely see India being a separate asset class, like the way China is, wherein there will be dedicated funds, wherein India will get the lion's share.
All right, Rupen, just hold on to that thought. By the way, the Nifty has seen a good recovery, and we have almost approached that 18,000 odd mark. We're at it on that 17,980 odd mark, which is the crucial level. The 17,950 call, that was very, very active, and there was writing being seen out there. Now, if we can hold above these levels, the last 30 minutes could be very exciting for the bulls. So we have come to this level. We need to hold on to here, because the call writers will be taken to the cleaners if that's what takes place. 80 points from the day's low. Keep an eye out on that. Even the Nifty Bank, that's moved to around the 50 DMA. We're just around 20 points away. In fact, we're now only 10 points away from the 50 DMA. And as we speak, we have moved to the, to the 50 DMA. 42,618, that's the 50 DMA. So we're interestingly poised. The bulls are fighting back as we speak. It could be expiry related, but a good fight back is what we've seen in the last 20-30 minutes odd. Well, Rupen just had to do a quick market check because, we're going to play out weekly expiry. But since we're talking about China, which has been struggling, and domestically as well, the rural theme has been struggling. Do you believe that both these two themes can be tactical plays? Could be played out maybe for around 3-4 quarters odd. And from the China perspective, I'm guessing commodities and rural plays, there are a whole lot of them out there. Would you play it?
No, absolutely. You're bang on, Nigel, and we would definitely, we believe that at least in the next few quarters, both these themes, be it the China theme or be it the rural recovery theme, will definitely be there at play. And we are already seeing some early signs of that. So while last quarter, all the consumer companies spoke about visible rural slowdown, but if we do an overall channel check, the rural incomes have not come off. Probably they did not consume as much because of higher inflation or higher input prices. But now what we are seeing, a reversal of that trend. Inflation also is cooling off. Plus, from a government perspective, as this is going to be a pre-election year, so we will hear, and already government is focusing on the rural India segment. And finally, also the recent the PM Garib Kalyan Yojana, which was extended, also lays a base, that rural distress probably will be capped and incrementally better for consumption. So those plays which are linked to rural India, wherein some of the consumer companies which has good presence in rural India, some of the lower end or probably two-wheelers or also early entry-level four-wheelers also will get benefited out of it. And sticking to China, definitely it's just if I were to just draw a corollary, it is, in Indian context, China is what, say, the PSU segment was a year and a half back. So it was completely unloved, probably underinvested and also undervalued. So you might definitely see some bounce happening out there.
All right, just hang in there. We were talking about the recovery that we're seeing in the frontline index. Don't lose sight of the mid-cap index as well. When we started the show, we had nearly 1,800 stocks declining for about 1,200 which were advancing. The decliners have now come down to around 1,550 odd, and the mid-cap index at an index level has risen, and it's about 0.5% higher as against at the start of the show it was just mildly in the green. The mid-cap index is virtually at the high point of trade as we speak, with a gain of almost 145 points. What's gaining? More of the same. We have seen extended gains on the tire pack. We have RBL Bank, which is doing well. Godrej Consumer has moved to the high point of trade, and Dabur too has actually moved to the high point of trade ahead of the third quarter update coming in from that company as well. Rupen, you spoke about how rural recovery could be a theme this year. How do you play that? Do you play that via consumer staples? Do you play that via two-wheelers? Or do you play that via entry-level PVs? Just trying to understand, the actionable ideas for rural recovery.
Actually, all three, Mangalam. And probably the easiest derivative there would be on the two-wheeler side. Because while fundamentally on a long-term perspective, two-wheelers have their set of challenges, but purely now, if the volume growth comes back, and at the same time, if I were to look into the valuations of the two-wheeler companies are probably much below their own historical valuation as well as the market valuation, and they all are companies having very strong balance sheet, dividend yields, and all those boxes are ticked. So that's where probably tactically you might see a decent upside. Wherein the other plays, consumer companies, again, it's not that there are 100% focused, rural focused companies, but there can be an NBFC which has a strong presence in rural India. That NBFC can get benefited out of this uptick in the rural market. So yes, I think broadly, I think the sectors which you mentioned are good sectors that one can look into to play this theme.
Okay, so rural NBFCs and some of these two-wheeler auto names. In fact, Jefferies also believes the Indian auto sector is poised to deliver strong returns in 2023 because demand is recovering from its worst slowdown in decades, and they're anticipating a 12 to 18% volume growth on a compounded basis for passenger vehicles, two-wheelers and trucks over FY23 to FY25. Rupen, we'll leave it at that. Thank you very much for joining in. Get into a break. On the other side, we'll get you a few ideas that you can trade, buy today, sell tomorrow ideas from our technical experts.
Welcome back. You're watching us here on Closing Bell, live from the CNBC-TV18 Motilal Oswal newsroom. The recovery for the market continues. The Nifty is just about 15 points away from the 18,000 mark. The Nifty Bank holding above that 42,600 mark. What are the sectors and stocks which are doing well? Metals is suddenly gaining some steam. We have the metals index actually moving higher. That is led by JSW Steel, which has moved higher. Alongside that, we have Tata Steel, which is doing relatively better as well. But the auto pack, Rupen just spoke about the two-wheelers. We had Hero MotoCorp, which has crossed that 2760 mark, which Mitesh was talking about. M&M has moved to the high point of trade. And now from the broader markets, Jubilant Foodworks is the other one, which has moved to the high point of trade, a recovery of almost 2.5% from the lows. So let's welcome Mitesh Thakkar once again to tell us what to buy today and sell tomorrow, or a reverse trade for that as well. Mitesh, your call on specialty restaurants was damn right. It's up 15% as we speak. And what are the other things that you're looking at right now?
Yeah. So I think, a couple of stocks which have reversed with the market kind of coming back very strongly. One of them on the radar is ABB. It's about 4% up. The intraday charts are looking very bullish and coming back from oversold levels. Likely to see some good continuation tomorrow. So that's the BTST. Keep a stop at about 27.94 and a target of around 28.35 can be looked at. The other one which I like is REC, just breaking into fresh highs. That's a BTST with a stop at, or that's even a positional buy. I'm okay with either. Keep a stop at 122, look for targets of 126, 127 for tomorrow, maybe even 130 eventually.
Okay, all right, got that, Mitesh. Let's get in Amrish Balika then. Hi, Amrish, good afternoon. Well, before we get to your stock pick, Mitesh just told us that REC is looking up on the charts, and both these two have done well, REC and PFC. After the stock price increase as well that we have seen, the stock still trades at around close to half times price to book, 0.5, 0.55 times odd. Obviously, there is a big risk because of the discoms and the health of Gencos. Exactly. But what's your sense on both these two? Do you have a view?
No, I mean, there is momentum in these stocks, so I think it can go up some more. But then at those levels, I would prefer to possibly book out, because I clearly don't see them, going up possibly 25-30% more from here. I'm talking of possibly another 10 to 15% more.
Okay, that's PFC REC. Any stock recommendation for our viewers, Ambarish, today?
Yeah, Rima, I've got one stock. It's a mid-cap TTK Prestige, which is a very well-known brand, leader in kitchen and home products. They have about 5 manufacturing plants and 2 dedicated research centers. And their products are available across about 60,000 retail outlets, and they have about 665 exclusive stores in about 376 towns. And Ultra Fresh, where they have put in about 40%, they'll be increasing to 51, which is an associate of Prestige. They are into modular kitchens, and they also have about 118 stores, and that's growing. Q2 earnings weren't really great, more or less flat to slightly negative, but management expects Q3 and Q4 to pick up. So I think that's going to be one trigger for this stock. And they have about 640 crores of free cash. In the quarter which just ended in December, they have introduced about 32 new SKUs. So that's also going to add to the top line as well as margins. And this sector also has been witnessing a lot of consolidation. And now majorly there are 5 players, including TTK Prestige. So the market share should improve going ahead. And for FY24, I'm expecting an EPS of about 27. And based on that, my target is about 1,080.
All right, a target of 1,080 on TTK Prestige, a significant upside from current levels. 18,000 is here on the Nifty. So that should be, a good move or good news for all the bulls out there. 18,000 is here on the Nifty. The Nifty Bank is above the 50-day moving average as well, 42,635 out there. And the mid-cap index holding up with gains of almost 180 points. So there was a bullet. The expiry allowed or ensured that we dodged that bullet. Jubilant Foodworks continues to move higher. Actually, it's moved to the high point. We have RBL Bank, which is doing well. It's come out with its update. We've been talking about it through the day. Amrish, wanted your thoughts on the second-tier banking names. I mean, you have RBL Bank, which is doing extremely well, up around 4% right now.
I think the move is more or less done as far as the BFSI space is concerned. I mean, we have seen the NBFCs doing extremely well quite some time back, and then we had the private sector banks. And lately, in the last 4 to 6 months, it's been the PSU banks which were not performing for the last 2 to 3 years. I mean, they have also performed. Some of them have actually doubled. So from here on, I think most of the good news is already priced in. I clearly see there could be some amount of margin pressure because of the rate hikes, and they have also, forced to increase the deposit rates, and saving banks rates will also go up. So I really don't see too much of an upside from here. I would possibly suggest people to book out of the PSU banks at these levels. And I think the only space to be held on possibly could be the private sector banks. And even in that, just about 2 or 3 banks, Kotak, Axis, and ICICI. Among the smaller ones also, most of them have again moved up. Something like Karur Vysya has doubled, South Indian Bank has doubled, RBL has actually come up decently well from those lower levels. So I don't think there's too much of an upside. I think it would be prudent, looking at the way the markets are, it would be prudent to at least book out to a large extent.
Okay, all right. Stay on with us, Amrish. By the way, good recovery is what we're seeing. The Nifty went ahead, took support at the 100 DMA, which was at around 17,900 odd, and a good bounce is what you've seen. A few stocks to highlight. Well, you pull up Reliance Industries. That's a heavyweight in there, so that's seen a good recovery from the day's low. And you have HDFC as well. Just pull up that one. That as well as cutting its losses as we speak. So these are the larger boys, and they help the Nifty recover. I'd pull up HUL as well. So a few of these names have done pretty well, and that's what's helped the Nifty. Remember, the plague moving into the final hour of trade on the option side was 17,950 call was getting written very, very aggressively. Those call writers, it seems, they've got stuck on the wrong side as we speak, because the Nifty now is holding above that 18,000 odd mark. We'll slip in a short when you come back. We'll run you through the final 10 minutes of trade.
What a remarkable turnaround in the markets. First, we opened flat, but then we had a very sharp decline. The Nifty went below that 17,900 mark. But since then, in the last 1.5 hours, there has been a solid recovery and the Nifty's back at that 18,000 level. Just look at the Nifty Metal Index. The Nifty Metal Index is now up 1%, with names like Hindalco as well as JSW Steel seeing a lot of buying interest. So Hindalco per se is now up close to about 1.5%. JSW Steel is up close to about 2%. But let's get you some opinion that we got earlier today. We chatted with Tahir Badshah, the Chief Investment Officer Equities at Invesco Mutual Fund, to understand his view on various sectors. Listen in.
We were expecting a leg of improvement in the sector at the beginning of calendar year 22, and good part of it has actually played out either in terms of the demand environment getting somewhat better, especially in things like passenger cars and commercial vehicles, and also accompanied by some easing in oil prices and commodity prices in general, which also came to their rescue. But it's now not easy low-hanging fruit anymore. And like as I said, our discretionary consumption is not entirely looking as robust. So we have to be a little more careful here. There are some pockets that we like, especially things like commercial vehicles, maybe tractors, agri-machinery, parts of passenger vehicles as well. We have a few exposures, across some of these, new gen businesses, or those which have listed in the course of the last 12, 18 months. And you're right, I mentioned this the last time as well, that, some of these are at least, obviously valuations have corrected. They still look high optically, but clearly they are significantly off their peaks. We are starting to see operational metrics improve, and probably, the path to profitability becoming a little more visible. A little more nearer rather than what it was earlier. So I think it gives some confidence.
All right. Well, from the broader markets, Amrish, before we wind down, I want to ask you about Jubilant Food. The stock has seen quite a big spike in the last 1 hour or so. What's your view on it? Do you believe there's still some concerns on it?
Yeah, there's still a lot of concerns, and I think this is more of a dead cat bounce. Because if you look at the details, the same-store sales are not really growing. Growth, again, is dependent on new stores, which also has been quite slow. Competition is really hot in this space, and the first-mover advantage which Jubilant enjoyed for the last 2 decades, I think that's faded. And the more important thing is that the new brands which they tried to launch, other than pizzas, over the last decade or so, haven't really worked. So I think the best is behind them, and any sort of a good bounce back should be utilized to, in fact, book out.
Book out if there is a good bounce back. Would you have a view on specialty restaurants? I mean, that's the stock which is up 13%, and since you spoke about Jubilant Foodworks, this is another stock which is moved to a record high right now.
Absolutely, I think specialty chemicals is in a much specialty restaurants is in a much better place than Jubilant. But again, the way it has run up, I think at these levels it has got a bit too expensive. I would possibly wait for slightly lower levels, possibly closer to 200 or a bit below 200 to buy. And in fact, just post-COVID, I had recommended the stock at about 60 or 65 levels, and I had a price target of about 145, 150, and it's just gone too much beyond that.
All right, Amrish, thanks a lot for joining in and giving us all those updates on individual stocks, etc. Let's start wrapping up the day then. Well, what a day it's been. 18,000 is what the last tick on the Nifty is most likely to be, but it has been a day of extremes. In fact, at the high point, the Nifty was above that 18,100 mark. The high on today's trading session was 18,120 on the Nifty. The low, 17,892, took support at the 100-day moving average. Thereafter, we saw a bit of a bounce back at that 18,000 mark for the frontline index. There was dramatic recovery in the last hour, understandably on account of the weekly options expiry. What led the market higher today was, from the lows, was the metals pack. So we have the metals index moving well, and that is what supported the index in the second half. Recovery coming in from, Reliance didn't hurt either. We did see some support out there. But by and large, it was a day of weakness for the banks. The banking index, while it closes at the 50-day moving average, it has seen a big decline from a couple of these names. We had some weakness come by in ICICI Bank as well as HDFC Bank. But stocks of the day definitely on the downside belong to the Bajaj twins. Top honors on the downside for the Nifty, Bajaj Finance as well as Bajaj Finserv. And then we saw some weakness come by for Infosys as well. On the way up, we did see some recovery in and resilience in the FMCG pack. HUL was among your top gainers on the Nifty, and that on account of decent updates coming in from both Marico as well as GCPL, and some hope of recovery in the rural markets in the next quarters to go. And that coincided with the kind of move that we saw in Hero MotoCorp as well. Hero MotoCorp up 2%. But broader markets, mid-cap index outperformed.
Absolutely. The mid-cap index was up 0.5%. The advanced decline ratio, the gap narrowed towards the end, but we still had more stocks in the red, 1585 in the red for about 1300 in the green. Just to quickly run you through, it was these FMCG names, Marico and GCPL, Godrej Consumer, ending in the green. This is after the company's commentary signal that demand is improving. So those stocks were higher in trade. JK Tyre up 7% by the end of its strength seen in Apollo Tyre, as with the decline in crude prices, rubber prices too have taken a bit of a backseat. RBL Bank, very solid business update. Their advances growth, the loan growth on a quarter-on-quarter basis was up nearly 5.8%. On the losing side, some softness seen in IRB. There was a stock split announced, but the stock came in for profit booking. And BF Investment, this is a stock you guys have been highlighting, but BF Investment down 10%.
Well, that's right. A few more gainers. It seems a bit of a party out there because you had Vadilal that was up. That's the ice cream maker. You had Jubilant Foodworks with the NSE trade. Well, that stock as well did pretty well. And the final tick is bang at around 18,000 odd. When we started the last hour of trade, that around 230 odd, one was wondering whether or not we could hold on to the 17,900 odd mark. But surprise, surprise, the bulls, they've staged a bit of a fight back. And the last tick is at around 18,000. And what's encouraging to see is the Nifty Bank as well managed to conquer the 50 DMA on a closing basis. So the last tick is at around 42,620 odd. That's bang in line with what the technical level was. Breadth of the market positive, and the bulls will take that as a bit of a positive for today.
Okay, with that, we're out of time and we're going to take your leave and closing bell. Thank you for watching. On the other side, we'll get you our Thursday special. Big deal. Stay tuned for that.